morning, good morning, good morning. See, what's up, man? Shout out to everybody pulling up the class early. Shout out to everybody pulling up the class early. Let me set this up and we gonna get right into it, man. Let me set this up and we gonna get right into it. Go to the tube and pin this comment. Sit that right there. And we gonna get to it, man. We gonna get into it. Good morning, good morning, good morning, good morning, everybody. Welcome to day 2 of tape reading with Timmy. A 5-day event brought to you by the good people over there at Tim's Tidbits. I was looking for my pictorial. Yes. Day 2 of tape reading with Timmy. If you know anybody who you feel like will benefit from this, please let them know to pull up with us until this Friday. We started yesterday. Felt like it was a pretty good session. And we're going to go until Friday every day, starting at 9:20 a.m. Just try to give us some time to get ourselves together before the market opens. And then we're just going to sit down there and read the candles. We're going to be looking at the open, high, low, and close on all the candles. We're just going to read the candles and see what price is telling us. On this channel, we've gone through all of the ICT concepts. I only trade ICT concepts, so I've been sharing my understanding of the ICT concepts, and I've gone through all of them that the way I understand it. And now the only thing that you can't truly put into a pre-recorded video is tape reading. So this whole week we're tape reading, starting at 9:20 and ending around 10:15. Y'all hold me to it. I need to set an alarm. Let me see who in the chat, then let's get to it, man. See who in the chat, and then we're going to get to it. While we seeing who in the chat, we're going to do the norm. If you are a day trader, you want every day, you either want to come to econoday.com or forexfactory.com and see what's on the economic calendar. You see, today we had the big dog, one of the big dogs. CPI is a big dog. FOMC is a big dog. GDP is a big dog. Non-farm payroll is a big dog. You know, all that kind of, those big dogs, you know what I'm saying, they move the market. When you see that red next to them, you have some with red, like jobless claims, you know what I'm saying, it's going to move it a little bit. But when you see stuff like CPI and FOMC, you start seeing candles like this. This right here, my friends, is a 1-minute candle. That's a 1-minute candle, right? 5 minutes, 15 minutes. Look at this hourly candle right here. You get candles like this 1 minute. The other candles are so small, we got to figure out how can I stretch this out so we can read the tape. No other hard-hitting news today. You got some Fed speakers today, but the hard-hitting news is out of the way for today. And this, you see, this is the news for the rest of the week. For anybody who don't like it, I like Econo Day because it's easy on my eyes. I can see it laid out in a way that I understand it. Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday, Thursday, Friday. I understand it like that. I'm accustomed to looking at calendars like that. forexfactory.com gives you the same information, right? This is how Forex Factory lays it out. I got mine set to show me a week at a time. You can go in and filter it how you want it to show, right? I got it showing me, see, default this week. I got it showing it to me a week at a time, and I got it showing only USD. I don't trade Forex, so I don't look at the news for the other foreign currencies. I just look at USD. That's how I got it set. Now, let's shout out who in the chat and then see what price did overnight, and we gonna get to it. We got 5 minutes before the market open. Who in the chat today? Shout out FC. Shout out Lil Hawk. Lil Hawk say he come to class early to beat here, learn and share. Hey, I promise you, here to learn and share probably popped in there at 4:30 this morning when I set this stream up on YouTube. What's up, Rhonda Green? I say y'all get no extra credit for y'all get no extra credit for being on time. What's up, Seawalk? What's going on, Thomas? What's going on, Father of Legends? What's going on here to learn and share? See that? Look at that. I came a couple hours ago and liked the post, but the side. It ain't no rule. Do what you do. Do what you do. Don't feel bad about coming early. Do what you do. What's up, F Mac? What's up, Laverne? What's going on, Kenya? Shout out to hey, the Russell's back in the house. The hardest lieutenant on the tank. What's up, Lieutenant Russ, Captain Russell, Colonel Russell? We gonna say Colonel. Mrs. Russell is the Colonel. So we gonna give you Lieutenant Colonel Russell. That's what you're gonna be, Lieutenant Colonel Russell. Mrs. Russell is Colonel Russell. All right, let's look and see what price did overnight, man. Move, little Timmy. Man, y'all, please don't let me forget to put this back on 1 hour when I put that back over there, because yesterday I was messing up. As you see, overnight price kind of hung out, consolidated as we expected. Just like yesterday when we started yesterday, we said, hey, CPI may affect trading. We made a decent move and slid to the right. Throwback gang. Do ya? Oh, Michelle Tucker. What's up, Michelle? What's up, Kareem? I appreciate that, Michelle. Hit the like button. What's up, Sanjay? What's going on? Candlesticks? Buenos dias, Valdez. Buenos dias. Hey, for anybody that don't hablo español, araña grande, big spider. You hear me? Cause ain't nobody signed in 4 hours early. Ain't nobody signed in 4 hours early. Good morning, Sonia. What's happening? Okay. Throwback gang. Y'all remember what we say before CPI, FOMC, before the big dogs, price would make a move, then slide to the right. Slide to the right. It'll make a move and slide to the right. So what did we do yesterday? Or whenever we made a move, these 1 hour candles, we made a move and slid to the right. Slid to the right. See how price shut up, slid to the right. News came out, run the stops, take off. Right? So let me stretch this out so you can see it. Stretch it out so you can see it. See? Price made a move, slid to the right, just like it I ain't gonna say always, but typically does. And then when the news came out, right, overnight, we poked above the buy side liquidity right there on that 4 a.m. candle, poked above the buy side liquidity, came back into the range right there. That's the new day opening gap. Right, we traded in between the new day opening gap and the new week opening gap all night long, all night. And then after midnight, we pushed up, made a high, took out the buy side liquidity, came back to the range. hung out at the top end of the range right there, right at the top end of the range. That's kind of like the middle right there from the high to there, but hung out around there. And then when just before the news came out, came to the low of the new week opening gap. Then when the news came, oh, the market is open, the market is open, the market is open. Came to the low of the new week opening gap. News came out, ran stops. This low right here, if you don't know what that low is, let me explain what that low is right there. That low right there, that's the last low from the regular trading hours from yesterday. That's the last low. If I put it down to a lower time, see right there. That's the last swing low from yesterday's trading for regular hours. I like to watch that when the market opens. And since we was down in that area, I was watching the low to see if we run that sell side before going up, because we were anticipating the buy program to continue. That's what we have been talking about all day, because we was anticipating the buy program to continue to come up into this new week opening gap where we are now. Now look at this humongous opening range gap right here. If you don't know what the opening range gap is, the opening range gap is the regular trading hours, the closing price of regular trading hours to the opening price of regular trading hours. That's the opening range gap. I'm just going to put this over to like 12 o'clock. Right there, that's good. And then, so that's the opening range gap there. Now, when I put this back on electronic trading hours, that's your opening range gap right there. From the closing price of regular trading hours to the opening price of regular trading hours, that's your opening range gap. Look at there. We got, what's up, E-Rock? We got us a little bit of teaching going on tape reading with Timmy. So that's your opening range gap right there. Now, price is moving close to the high of this weekly SIBI. Though this is the weekly SIBI we was anticipating price to draw toward if the buy program was to continue. Now we've got almost to the high. We're at our draw. We're at the destination. If you are trying to trade, when you get to your destination, you really want to wait for price to show you what it wants to do. You don't want to try to guess and say, we got to come back in here. Yes, when you get to your destination, when you make a big move, you anticipate a retracement, but you don't want to just say, oh, we're going to get a retracement and try to short from here. You don't want to say, oh, we're going to keep running and try to go long from here. We have made it to our destination. Time to get off the bus, stretch your legs, relax, give yourself a morning yawn, and let price show you what it's going to do. Now, let's jump to the weekly real quick and look at, since we have reached our destination, we're going to read the tape, but once you reach a destination, you want to look at price and reevaluate it. Why did I go to the weekly? I'm going to the weekly because our destination was a weekly fair value gap. So I'm coming to the weekly to analyze the weekly chart and then move down. Looking at the weekly chart, the first thing I notice is, right, this fair value gap that we had, mark that as the fair value gap below us, and this fair value gap that was above us, right? The buy program continued, and we went to the top. We're at the top of the bearish fair value gap, right? We're about to be working. If this week closes above the low of this weekly candle that we're making now, which is 4407.25, if it closes above that 4407.25, we will create a new weekly BISI below us. Why am I pointing that out? Because on any time frame, and especially the higher time frames like the weekly and the monthly, anytime you get two imbalances on top of each other like that, that's extremely bullish or extremely bearish, depending on which way you're going. Second thing is, all of this from this candle, from this high right there, let's go from this high all the way down here, all of this is a potential balanced price range. So the algorithm can very well leave all of this alone. Why do I say that? We offered sell side delivery all the way down, and we've offered buy side delivery all the way back up. So we got bodies over bodies all the way down and all the way back up. Right. This imbalance down here next to this breaker, you want to look at this on the weekly time frame as a potential breakaway gap. You want this to be a breakaway gap, right? Break away gap. You want this to be a breakaway gap. Why do you want this to be a breakaway gap? You want it to be a breakaway gap because if we create a new fair value gap above this right here, with this fair value gap, this move is the institutional sponsorship on the weekly time frame. So, and it's exceedingly bullish because we will have made two bullish fair value gaps on the move up. This bullish fair value gap is in line with the body of this breaker. This bullish fair value gap is in line with the consequent encroachment of the wick. What do we say? The wick, from the wick to the body, is the most sensitive part of the reference point, the breaker, the order block. This long wick here, look at the price, how the price has done, right? These trading both ways, those candles there, sell side, buy side, sell side, buy side, it's offered. This candle's body here, sell side. These candles body over here, buy side. All of this is sell side and buy side delivery has been offered. So we've been running. Anytime price runs like this and you reach your destination, you anticipate price to either consolidate or pull back. If price pulls back, what's the most likely place to continue higher from? You pull back, everything from this is a reference point. This is consequent encroachment of a wick and a weekly breaker. You come back to this imbalance, you come back to that consequent encroachment, the algorithm can say, oh, I remember you. Everything below you is already balanced. I don't need to go down there because that's a breakaway gap. Let's just touch this fair value gap and get gone. Get gone. Now, let's check something real quick while we're here. Look at the monthly. All right, this is the monthly high that we were looking at, saying that was the only draw for the monthly, right? That was the only premium PD array for the monthly, right? Oh, look at that. It's also consequent encroachment of the monthly down close candle right there. Once we break that right there, once we break that opening price, this is now a potential order block. What makes that a potential order block? Right? We came down to an anticipatory reactionary point, and then we taken off, right? It's a potential monthly order block. Look at the wick. That's from the weekly wick. It's the same thing. And where does it sit? It sits in the discount for the range that we said for was the monthly. We said Picasso was living up here. I'm sorry, y'all. We done turned this into a class. We supposed to be tape reading. I jollipies because we supposed to be tape reading, and we done turned this into a class. We said Picasso lived up here, right? And then if the price is taking off, shout out Michelle Tucker. Tim, it's just running off. I didn't get an opportunity to participate. I'm getting FOMO. Oh, Michelle, don't panic. Just wait for price to give you a retracement. And look where we were on the weekly. We were just talking about the weekly. We was like, hey, this is a balanced price range. Hey, price can come back to here. And then when we looked at the monthly, we came to check the monthly. Guess what's in the discount of the monthly range? I know somebody just got an aha moment. I just got an aha moment. In I'm the one teaching class. Now, the reason why I was running this high right here is because this fair value gap right here, right? We're anticipating it to support price, right? We're anticipating it to support price. This bearish fair value gap on the weekly can very well act as an inversion fair value gap. Why is that? Because we're anticipating price to come here. This bearish fair value gap rests very close, right at or near equilibrium. So we can get us a retracement to discount, a slight discount, touch that right on the weekly, and then wick back up inside this. And this right here can be an inversion fair value gap. Why am I looking for it to be an inversion fair value gap? Again, because the narrative is the monthly wants to go here. It wants to go there. Let me get my finger in there. The monthly wants to go here. This weekly is right around equilibrium. It's a bearish fair value gap. I'm not anticipating price to sell off of it. I'm anticipating it to support price. So it's right around equilibrium. It's bearish. It's opposite of what the bias is now. So since it's right there around equilibrium, I'm anticipating price to get on top of it and use it as support to go back up. It can actually happen from trading like a slight retracement to here and then wick back up into it because it's a weekly imbalance. So the weekly candle closure, you want to see how it responds to that, right? How the weekly candle closes. Oh man, boy, we going crazy on the teaching today. Michelle say I'm still waiting on that retracement. So Michelle, I'm glad you said that. On the retracement, since there is a gap down here, you're anticipating to be a breakaway. You wouldn't want to go full throttle at this gap. You put in however much you like, you know what I'm saying? Just say you be like, hey, I'm gonna put in half of it here because I feel strongly about this being a breakaway gap. I'm gonna put in half of it by time, right? If we don't come to the breakaway gap and we go up and get above the inversion, when it comes back to the inversion fair value gap before hitting that, then you put another piece on. This is not financial advice. This is just Timothy Lee Rogers stating what he would do in this situation. Hey man, let's start reading the candles. We've been like in full-fledged teach mode. I don't know. I'm getting carried away. So we just gonna start reading the candles. Let me put this back on 60 minutes. and we're gonna get to reading the candles. I appreciate y'all for putting up with me slipping into teaching mode. Shout out Father Legends. Let's see what the NQ doing. I got the NQ doing the same thing. The NQ and ES mad strong. The 60-minute candles are like pegged at the top, and then the dial a little bit weaker in this hour. It's strong, but it's a little bit weaker in the hour. See, it has like a little wick on the top of the candle right there. Y'all probably can't see that. Y'all probably can't see that. Where are the candlesticks? Where are the wicks? I can't remember where the wicks are in here. Candlesticks, wicks, right there. 2. Trying to make the wick bigger for y'all. I'm trying to make the wick. Where's white? Let's try snow. Okay. Oh man, it only did it on one. Cheese and rice. It only did it on one. Okay. But now the NQ done, I was just talking about the YM, and now the NQ done pulled back harder. The NQ was pegged at the top. Now the NQ done pulled back harder. Now the YM starting to push. Now it's the YM and the ES that's like close to the top. The NQ pulled back just as I was trying to get the wicks together. Boy, you got to get your wick together. What's wrong with your wick? Boy, what's wrong with your wick? Shout out Lil Hog. Lil Hog said I'm in my bag. I appreciate that. I appreciate the love. Again, this is not financial advice. This is just Timothy Lee Rogers saying what he would do in a situation like this. All right, man. Let me try to get this together. Okay, these are the 1-minute candles down here. So we'll look at the 1 minute. We're gonna watch the 1 minute. I'm sorry if this other stuff look a little busy and jumbled up because of how price took off, and so all the lines are all squanched together. I apologize for that. I can't really help that. Remember this blue box, that's the opening range gap. That's the opening range gap, the blue box. Let's look at regular trading hours real quick on the 15-minute. See what if we're approaching anything. Man, it's we way above anything on the regular trading hours from yesterday. So I ain't even gonna waste my time on that. We way above anything for yesterday. We it's above me now. It's above, price is above me. We've reached our weekly draw on liquidity. So now it's just sit back and see what price do. Okay, the buy program is still in full effect. So as long as the buy program is in effect, you anticipate down close candles and discount PD arrays, meaning PD arrays below price to support the bullish momentum. Okay, we've gone up and we're wicking down. Watching this, this is a 1-minute counter. So the lower the time frame, the less weight they carry, right? This is a 15-minute over here. I'm just gonna make everything large because we know price just ran, right? So we have a potential order block on the 15-minute right here. The opening price of the order block, bullish order block, open. The opening price on the order block is 44.88. So on the 1 minute, that's down here, 44.88. That's the opening price of the bullish, the potential bullish order block right there. A break of these low, a break of the low of the order block would give you a break in market structure on the 15-minute and below. The low of the order block is 44.8225. Right. So the consolidation from this morning, right? So these are 1 minute candles. See all of this morning consolidation right here, right there, from this 9 a.m. candle over to where we are now. You can see it even there. So all this consolidation after the news candle, we pushed up. All this consolidation right here, a break below that 44.8225 would be a break in market structure on the 15-minute, 5-minute, and the 1 minute. Whenever you get a break in market structure, you're looking for displacement. You're looking for displacement once you get that break in market structure. The buy program is in attack, so we can take sell side. If the buy program is to stay intact, we can take sell side. Yes, get in that break in market structure. But if it rejects heavy, that's a sign of, because a swing low, a low is a discount PDub rate. So respecting a swing low is poking below it and rejecting off of it heavy, a stop run. And the way I like to see stop runs is when the candles do it quick. They do it so fast, like looking at the candle in hindsight, you can't tell if, yeah, that was a stop run. You just say, oh yeah, that was a stop run. But if you're watching price, especially during like the macro times, like we at the macro right now is 952, especially during the macro times, like if the price just moves extremely fast, like that, you see how price just moved just then, be moving really quick. That's what I like to see with stop runs. You see how I jump down there really, really fast and then push back up? That's how I like to see the stop runs. I like to see it go down there and come back real fast, like stuff you can't see if you're just looking back at the candles later. What's up, Trey? When you slid up in here, shout out Trey in here. What's up, Louis? My brother in here, Miguel. Okay, let's mark out. All right, that's 10. There you go. 950 to 1010. Cause I'm on wiping out. Cause I'm on wiping out. Looked at a little Bootsy interview on the Breakfast Club yesterday. Bootsy a fool. I like old Bootsy. I ain't never really listened to Bootsy music like that. My sister-in-law, when she used to love Bootsy. She probably still love Bootsy. But when I first started dating my wife, well, my sister-in-law used to love Bootsy. Stay, hey Tim, Bootsy gonna be up there on DIP this weekend. You coming? EOOSIEBADAZZ. That's me. You can't see it on the 5-minute chart. We started pushing. We pushed up, and now we just, do the doing. We do the doing. Just continue to move up. We got 3 minutes left on this 15-minute candle. The 9:45 15-minute candle. It's looking like we're going to create a 15-minute fair value gap, which validates that this right here is a bullish order block. Right? You got expansion with displacement. Right? We got the imbalance, strong closures above the buy side, another strong closure up. Right? So you got expansion with displacement. Now, boom, that validates that as a order block. Came up to an anticipatory reactionary point, short-term shift in sentiment, expansion going past the opening price with displacement. There's imbalance. That's the expansion with the displacement is the last piece of the puzzle to make that order block. Coming to a point of anticipated resistance or support, short-term shift in sentiment, expansion past the opening price with displacement. That's the change in the state of delivery right there. The short-term shift in sentiment, the state of delivery had went bearish with that shift in sentiment. Once we came back past that opening price right there is the change in the state of delivery. The fair value gap, that's the displacement. Lets you know displacement is there. That's the order block. Every down close candle or up close candle not going to be an order block. It has to meet the criteria that's in place for order blocks. Reach a point of anticipated support or resistance, short-term shift in sentiment, then displacement, you know what I'm saying, going past the opening price, changing state of delivery. Boom, there you go. All right, 958, we're still pushing up. Still pushing up. Price is just walking up. Let's see what's going on with all three. These are hourly candles over here. Everybody's just still walking up. The Dow has picked up momentum as far as this hour is concerned. Let's look at when I zoom out. There's nothing for me to even see over here, right? So we're just in outer space right now. We're out of space right now. We're just letting price tell us what to do. We're in a buy program, and we're accepting that. In the buy program, anticipating down close candles to support price. The 1-minute chart is the only chart that has any down close candles right now. No down close candles on the 60-minute, no down close candles on the 15-minute, no down close candles on the 5-minute. True, we've only been open for 30 minutes, but that says a lot. because in 30 minutes, you have 1, 2, 3, 4, 5, 6 5-minute candles, 2 15-minute candles, and 30 1-minute candles. The 1 minute is the only one that has we just got to 10 o'clock. Is the only one that has any down close candles. So we've just been stair-stepping up. Just been stair-stepping up. Still stair-stepping up. See here coming in. Talk about the buy program. I guess we could talk about that since price just stair-stepping up right now. When we opened up here, we opened up 930, came down, poked below that short-term low, came down into this order block right over here, came into the wick of it, came to the wick of that order block right there. Yes, we did. Boop, rep came down, and then we took off. Now, pulled back into this fair value gap right there, right? The down close candle that we wicked below it, pushed up, closed inside the down close candle, right? This down close candle here, wick below it, closed well above this down close candle and that down close candle. Wick down, right? Close there. Down close candle. See, all the down close candles are still supporting price. Even when it pulled back into it, it supported price and kept going. So the buy program is still intact. We don't have anything over here on the shorter time frames to look for. On the weekly, we have a swing high up there. See if there's anything in here on the weekly. We got a weekly high right here. So there's going to be some type of swing in there on the lower time frames. So that's a weekly high. So there's going to be some buy side in there on some time frame. Let's see if we can find a target to the upside. Okay. And there's a daily fair value gap right there. There's a daily fair value gap right there in line with that high. Let's look at that as a, see what price does when it gets there. It's 10:03. Y'all don't let me go over time. Okay, so we got a daily fair value gap. All right, so daily fair value gap. Yeah. All right, so yeah, daily fair value gap and a daily high. So we're gonna look at that as a draw to see what price does when it gets there. See what price does when it gets there. I'll see you when you get there. When you get there. If you ever get there. This was an hourly, so I'll put it from here. No, this was a 15-minute. Yeah, it was a 15-minute order block. I really don't need it there. I just was putting that there for, you know, just for a purpose of teach on. It was a teaching guide. Okay. The 1 minute chart is still the only chart that has any down close candles thus far. Good guy, trash music. Oh, we must be talking about Boosie. Okay. What's up, 100? Shout out 100 in hell. What's going on, Derek? What's up, Derek? Hey, 100. I saw a video the other day and it made me think about you. It was a dude. His dog was birthing a litter, and one of the pups came out unresponsive, and he had the little pup, and he was like rubbing me, grabbed the little pup and was like stretching his body out, and you know what I'm saying, I guess trying to pump the liquid out his lungs, and was like massaging his back and like pumping him, and then he have like his little booger snatcher or whatever you call it. So he was like like blowing in his nostrils, trying to blow this stuff. He was either blowing or sucking. I don't know what he was doing. He was like, and then finally the little pup started making a little noise and sucking on his finger. And he was like, man, this is, you know, I hope y'all learned something from this. And I'm like, man, I wonder if 100 ever had to do that with his litters if one come out and ain't breathing or unresponsive. Hey, it's 10:06. Price just kind of melting up today. For everybody that was tuned in to today and yesterday, what I'm gonna do, I'm gonna put the link in the chat. Oh, Slater did that too. He did that. Okay, then. Saving pups. I guess that's a common thing. I'll put a link in the chat. You can either click the link and pull up, or you can drop it in the chat. Give me some feedback as far as like what we can do throughout the rest of the week to make this better, what you would like to see. Yeah, it's the worst. Thank God for trading. Yeah. You know what I'm saying? What you would like to see to like improve the tape reading event that we doing this week. Anything you like to implement, we can discuss that. We getting the retracement back now, pulling back now. We got 2 minutes left on this 5-minute candle right here. The 1 minute has pushed down past this bullish fair value gap. We're going into is the end of the macro. We're moving kind of fast. We're coming close to the end of the macro time. So the 1 minute, the 5 minute is at a 5-minute BISI right now. Watching this 5-minute BISI right here to see if this 5-minute candle respects it. Remember, on all the time frames, you want to see what the body of the candle on that time frame does with that PD array. Like this 1 minute closure below this 5-minute imbalance right here, that's nothing. It's par for the course. That doesn't mean anything. A 5-minute closure below that 5-minute fair value gap means something. That's when that you want to look at the time frames. Yeah. If you got any questions for the last 5 minutes, we'll go to 10:20. The last 10 minutes, since we started at 9:20, we'll go to 10:20. The last 10 minutes of the episode of the broadcast, or whatever you want to call it, if you got any questions, you can drop it in the chat, or you can click on the link and pull up and ask, or any feedback you got besides, oh, this is good, this is great. Yeah, that's fine. Like constructive feedback, like, hey, you think we can implement this? Hey, and is be a yes or no. Closed mouths don't get fed. Yeah. All right. 6 seconds, 5 seconds left on this 5-minute candle. And it looks like we're respecting that fair value gap. That 5-minute candle did respect that fair value gap right there. For this little section of price, right? There's no down close candle here on the 5-minute, but if you see like this little slide over move right there, we went up and slid over. You can look at that little piece of price right there, and you'll notice that we came into a discount. And if you look on the 1-minute, right, that little consolidation area, right, that's the low right there. That's just the 5-minute, using the 5-minute candle. But for that little piece of price right there, we came back to a discount. In that little piece, in that little section of price right there, came back to a discount, and we're pushing back up. So what you want to watch in a case like this, when you come back to the discount and push back up, for the buy program to stay intact, you want it to push through this 1-minute fair value gap. You want it to push through that, push through and get back to the high for the buy program to stay intact. Now, this is a 1-minute chart. So this 1-minute chart can dilly-dally a long time if it want to, because the 1-minute chart, this is the first down close candle on the 5-minute. So now the 5-minute has a down close candle. No other chart has a down close candle yet. So price is starting to build in some type of structure. You know what I'm saying? You have to give it time to build in structure. This ain't the time you want to try to get in there and be trying to trade. Let it build structure. Let it give you displacement. Show you what it want to do. Live to trade another day. Let's go to the chat. There. I just hope price gives us a better structure to go over. All we've been doing is going straight up. Yep. Kenya, can you explain why a closure below the 5-minute fair value gap on the 1-minute? Because it's a 5-minute fair value gap. It's in the grand scheme of this fair value gap doing its job. This 1-minute closure doesn't invalidate this 5-minute fair value gap, because we got a closure below it on the 1-minute, but the 5-minute closed above it. So it did its job. The wicks do the damage, the bodies tell the story. Right? So anytime you're watching a PD array, you want to see what the candle on that time frame does. Hopefully I was clear. Tim, do you use daily bias going into the next day based on yesterday's open, high, low, and close? Yes. Yes. Based off what the previous day's candle do, I use that to see. I use that in conjunction with what the order flow is to see what price is most likely to reach for. Right. In conjunction with the order flow to see what price is most likely to reach for. Now, for example, let's look at this little area right here. Price is trying to build out structure. Right. So we pushed up here. We're pushing up, pushing up, pushing up, pushing up. Right. So when we up here, we're starting to anticipate maybe pulling back slightly, maybe just continuing up. This down close candle gave you a hint of it might try to pull back. But then when you look to see where it pulled back to, you see, okay, I just came to a discount, but it's still respecting this right here. All right. So once this candle closes, right, I can't just automatically say this is a bearish candle, so I expect it to keep going down. I got to look at the context of what's going on. Just say if these were daily candles. Okay, this daily candle came down and took out that low, but then it rejected back and closed above this low. So now since it rejected and closed above that low, I'm anticipating the next candle to maybe pull back to a small discount and start moving up some. And that's what this candle did. Why? Because it rejected and it respected the low, right? Even though this candle was moving bearish, it rejected and respected the low. So I look at what the counter did, what will it most likely reach for, but you got to tie it all together with the narrative and have you come to an anticipatory reactionary point. It's a lot of stuff that go into bias. That's why I always say bias is a hussy and she for the streets. So she'll flip-flop on you. So it's like narrative is more important than the bias, because bias is so short term. You know what I'm saying? Bias is so short term. 4-hour CE wick caused rejection so far. Where we at over there? Here, right there. This one here. That's the one you're looking at right there. I see we hit CE of that wick right there. Somewhat one of them wicks. It looked like it's this one here. He said a bearish. So that's a bearish wick right there that we just hit. It's a bearish wick. Said a bearish wick that we hit. Appreciate that 100. Pulling up with the hard hitting info. What would you need to see? Oh, that's Trey. What's up, man?
What's the word? What's the word?
Same old thing, different day. What's up with you?
Not much, man. I mean, of course, I know you say you didn't want to hear anybody saying you do a good job. I mean, what you do, but if it's one thing I might say, and you already do this, but just say keep doing it. And when the young woman, Kenya, I think her name was, she asked about why is a 5-minute gap or a closure below a 5-minute gap or a 1-minute gap insignificant. Just keep drilling in that higher time frame for everybody. Keep just showing them that how important it is to see where the weekly, daily, where the monthly, weekly, and daily is going. Because that's like, to be honest with you, over the last, I would say since June, man, I lost a trade on a breaker trade. And to be honest, man, I ended up spiraling that particular day. But what happened was I wasn't in line with what the higher time frame was trying to do. And I said from that moment, I was going to sit and watch these monthlies, these weeklies, and these dailies and treat them like they were how the 5-minute or the 15-minute might print. Because some of the same stuff they do on the lower, the daily is doing, so I can figure out where price is going. And I think if a lot of people, I think if they can really start understanding where price is going, they'll find a way to participate. We'll find a way to get in, but they really have to. Everybody was trading. We all, I ain't gonna say they, we all have to get a good understanding of where price is trying to go, because that's the thing ICT says. But then, sometimes he may go and he be on the lower time frames. You don't understand the reason he's as good as he is because he really understands where price is going. So I think just keep drilling that in everybody's head as you're going through. Keep showing them that monthly, that weekly, that daily, why you think price is reaching for that particular area. I think that's, if I could give any kind of feedback on what I think, you should continue to drill in people's heads, like that's super, super, super important.
I appreciate that. I ain't gonna let this pass. Y'all see what that man got behind his head on the wall back there?
Oh man, let me cover this stuff.
This is this man right here. This man right, y'all don't understand who in the building. You feel?
I want to talk about that.
you see them plaques on the wall back there?
Hey man,
I just want to put that out there real quick. Hey, you know what I'm saying? I appreciate that. Man. Yeah, you're right. That's super important. I appreciate that. What Rocky's saying, Rocky say, what would you need to see to take a short on a day like today? I ain't gonna hold you, Rocky. I ain't even trying to short on a day like today. But if I was in the mind frame of wanting to take a short on today, I usually submit to the hourly time frame as my level of liquidity that I need to see taken. Right, we're well above any time frame liquidity. Right, so the hourly liquidity has been taken to the upside. Now I would need to see a break in market structure on at least the 15-minute with displacement, and then give me a bearish fair value gap to short off of, and that would be that order block. Remember, I said on that order block way down there below that consolidation, a breaking market destruction with displacement at 44.8225. If we get a breaking market structure down there with displacement, then I will be looking for a imbalance. Let me get my line together here. So we came down. Get out of the way.
Hey, I'm gonna go ahead and log off. Tim,
All right, then, bro.
All right.
Okay. Right. So let me make this bigger. All right. So that's that 44 and 81.25, and it's just my personal preference. Right. So the hourly been taken. Right. Give me a 15-minute breaking market structure right there. Right now, this is the only one. If we come down here and push up, take out a high and create a nut, like just say if we come down, if we did this, right, came down to this fair value gap, push back up, then came down there, I would look for something to short in that area right here at this breaker. Right? Why would I look for something there? Right? Because we've taken hourly buy side there. Right? We came up and we took the buy side again, and then we displaced down, got an imbalance and a breaker right there. Right? So I would look for something to short there. Right? But if we don't do that, then I would need a breaking market structure here. Breaking market structure through there with displacement. Right. And then come back up to a imbalance in this. You get what I'm saying? Come back up to an imbalance up here somewhat, like, you know what I'm saying? Give me the break there and then come back up and then try to short off of that. Let's do it like that. You get what I'm saying? Because right now that's the only imbalance there. So it would, you know what I'm saying? It wouldn't come straight like that. It's going to work its way down. Price don't just move in a straight line like that. It's going to work its way down. Right. You said we constantly just kept overlapping. Overlapping. Then we got our break and then went back up and done like that. Got it. Father, thank you, coach. Looking at, we 3 minutes over. This is the last one. Looking at yesterday's candle, I lean to pull back. Looking at yesterday's candle, I lean to pull back similar to the action on 10-12. Keep in mind, I was aware of CPI report. Been too busy. Guess that goes back to bias and draw. Looking at yesterday's candle, I leaned to a pullback. Okay, so looking at yesterday, you was looking for a pullback. I think that's what I'm getting out of that. So based off yesterday's candle, you was anticipating a pullback. MES, ES, they all the same. Just be a couple ticks off sometime. So, Lieutenant Colonel Russell, I mean, I get that. I get that because it's like an indecision candle. We've been pushing up. We just took out buy side. I get that. I understand that. Totally get it. But in the grand scheme of things, right? We always want to keep the scheme of things intact. Right? We always want to keep the scheme of things intact. What you want to always focus on, even if you are totally oblivious of the news, right? Even if you are totally oblivious of the news, what you always want to focus on is what's going on. What's the long-term draw? You always want to focus on the long-term draw and drill down, like Trey was saying, right? On the monthly, we came down and respect the discount PD arrays, right? We came down into the order block. We respected that, right? Right there, boom. Came to the order block, respected it, and we blasting off. The only place to draw to on the monthly is the high. We have no imbalances above us. This is the only PD array on the monthly, right? No order blocks, no nothing to think of. We don't have any displacement over here. So this up close candle right there is not being looked at as an order block because we don't have any displacement to the downside, right? So this is the only thing we're looking at, that high on the monthly. That's the only thing we're going to put Picasso up there. That's the only thing we're looking at on the monthly, right? So the only PD array on the monthly is up there, drawing price up to it. On the weekly, right? On the weekly, we have a weekly imbalance that we were drawing to. We were drawing to that weekly imbalance. Yes, it's past it now, but yesterday we were drawing to it, right? On the daily. See right there, we had just touched it yesterday, right? We had just touched it, and then we just touched that, right? Just barely touched that. Now, what do we say about when we coming up to highs, right? When we come up to highs, if we don't get a strong rejection, we look up and to the left for our draw, right? So with this daily candle here, we came up, right, above that high, backed off it a little bit, but it wasn't like a strong rejection. So you kind of watch and see what it wants to do. Now, with this daily candle, we took out that high, but we also came down and did what? We made a potential immediate rebalance based off where this candle opened and this candle high is. There should be an imbalance in there if this candle did not come down and overlap that wick. So price did an immediate rebalance, came up, took out the buy side, right, and closed, toward the higher end of this candle. So that's being closed at or near the high. Even though it's an indecision candle, we're still closing more toward the high of the candle, right? So what? The discount PD arrays are still supporting price. We're coming down, a potential order block, supporting price. Why I say potential order block? We don't have the displacement yet, right? But the bias is leaning toward this being a potential order block. This being an order block, we are anticipating displacement. Potential order block, down close candle, supporting price, right? Come over here, breaker, supporting price. So discount PD arrays are still supporting price. So the buy program is intact. So we still should be looking up, right? We still should be looking up because when this candle closed on the daily, right? Where's the only imbalance for price to draw to in the buy program? There's no daily imbalance in here. The only daily imbalance voids the buy program because they're down here. You have a daily imbalance right above price. We just touched a weekly imbalance taking out buy side. So the only imbalance for price to draw to is above price. And the bias is bullish. The narrative is bullish. The buy program is a buy program, is bullish. So, you know what I'm saying? Just like Trey was saying, always think about what's the higher time frame draw when you get candles like this right here that don't really give you nothing. You know what I'm saying? Just stick with the higher time frame. When they ain't giving you nothing, stick with the higher time frame draw. That was a long-winded way to say that. It's 10:30. I'm sorry for keeping y'all over time. You're welcome. You're welcome. Yes. Trading off breakers have changed my trading game. Well, breakers are the hardest for me to see, but I need to work on it. Yes, just work on it, Kenya. What I did for helping me with breakers, I don't try to look for breakers like I only look for breakers with with like institutional sponsorship. I only look for breakers tied to displacement. I don't look for breakers like all up in the midst of things. Right? I don't look for breakers in the midst of things. I look for breakers in moves like this. You know what I'm saying? I look for breakers and moves like this right here. Like, I look for like big breakers. You know what I'm saying? I'm looking at like this right here. Like, that's a breaker. Why is that a breaker? Right? First of all, we came to an area of we came to an anticipatory reactionary point. This fair value gap right there. That's where you start. You got to come to an anticipatory reactionary point. Came to the anticipatory reactionary point, right? We made a low. We made a high. We made a lower low. We broke through this leg right here, right? Let me do it like this. Anticipatory reactionary point. We made a low. We made a high. All right. Made a lower low. Made a higher high. Last up close candle. Right there. Right. Last up close candle right there. This high took out that low. Last up close candle in that range. Right there. That's your breaker. That's your breaker in there. Right. Let me do this right here. That's how it looked like. That's what it looked like on the line chart. Right. That's what it looked like on the line chart. You know, you be drawing the squiggly lines. Got low, high, lower low, higher high. Just breaker right inside there. But I try not to look for breakers like all in the midst of like just in the midst of price. I look for breakers tied to institutional sponsorship. Right? I look for them tied to institutional sponsorship. And does it fit the narrative of what's going on right now? I don't just try to, like, you know, I know everybody be like, oh, the breakers are so powerful. The breakers, every PD array is powerful. There's no one PD array that's better than the other. All right, you just have to know when to buy the PD array. You have to know when to buy the PD array. Look at this fair value gap right here. Look how price took off from that fair value gap right there. Right, took off from that. You know what I'm saying? Took off. And then if you come over here, if you look right here, look at this breaker right here. Look at this breaker right here. See that breaker right there? That breaker right there only pushed price up to there. Yeah, that's a good move. That's a great move. But then we immediately went back through it. Right? If you were just buying off of that because it's a breaker, right? You got there, you happy? Then got head bust in. Right? You got to know when to buy the PD array. Right? This breaker right here, it wasn't part of the right narrative when that breaker was made. When this breaker was made, it was bearish. It was a bearish narrative, right? Coming back up here, we're trading back up to that breaker right there, that bearish breaker. We traded back up to that bearish breaker and sold off. Now, if you were looking wrong, like, oh, there's a bullish breaker, let me buy that. You got your head bust in because all you did when you came up here, you hit a bearish breaker. So when you came back down and was trying to buy off this bullish breaker, you got your head bust in because the narrative was bearish. You got to know when to use the PD array. It's not about the PD array itself. There's no one PD array is not better than the other. It's all about where is the higher time frame trying to draw to. And then if you're nimble enough, you can trade intraday against the grain, but the better trades are always going to be in line with the higher time frame. You're going to be able to, feel more comfortable about it. You're going to, less stress, all of that. Might have to take less trades sometime, but hey. What's up, Sarah? Thanks, Tim. Can you include AMD going forward? Yeah, we'll look at that. We was talking about that. Sunday or Monday. We be talking about that all the time. We just, you know what I'm saying? We be talking about that all, but it's one of them things where you can anticipate it. But until it happens, you know what I'm saying? Accumulation, manipulation, distribution is kind of like you can only show it through hindsight, but you can anticipate it, like how we was talking about. You can anticipate. Matter of fact, we talked about that all last week. We was like, you know what I'm saying? Based off the narrative, remember, we did come down, so this could be the manipulation because we came down already because we were anticipating price to go up. We was anticipating price to accumulate on Monday, you know what I'm saying? Give us some kind of manipulation down and then some kind of expansion up, but we didn't get the real manipulation move until Thursday. You know what I'm saying? Because we was like, this could be the manipulation move. But since price was waiting, we see now it was waiting for CPI way back here. Way back last week, it was waiting on CPI. Because look here, this is last Monday and the whole week. And then now here Monday and Tuesday. So price was waiting on CPI all the way back then. When we was talking about this, we said we got the indecision day, right? A good accumulation day, right? We went up and we went down. So, okay, which one of these the manipulation? We didn't really take off. So we like, okay, we ain't got nothing. We moved down and took out the lows. Okay, is this the manipulation up or is this the manipulation down? Right? Preferably the manipulation down because we anticipating price to go up. But price may want to pull back a little bit. And then we get you know what I'm saying, the move up, showing, okay, this was the manipulation down. We got to move up. And then this week, we come in and blast off with CPI, and we learned, hey, price was waiting on CPI all the way back then. Because what did it do? It made a move and slid to the right. Slid to the right. You feel me? But yeah, we'll it's all right. Hey man, I read shorthand, Lieutenant Colonel. Hey man, hopefully I said something to help somebody out today. If I didn't, I promise I'll do my best to try it again tomorrow. I'm sorry for going over today. We an hour and 21 minutes into it. Hour and 21 minutes into it. I see that price has hit that buy side line that we have put up there. It hit that buy side line that we put up there, and that we got a fair value. Yes, it is. Okay. Okay. Yes. So it hit that buy side line. It touched the fair value gap. Now, remember what we say about imbalances, right? What is this? This is a daily fair value gap. All right. So any imbalance really, but what we always want to look at, we want to grade them. Right? We grade the imbalance. What's that? 40 14.50 and 19 even is the price. Oh man, I did a great job on that. Oh man, I put it right on the money. Let's grade it. Quick grade. Okay. So we've reached up into the lower 25%. The lower 25% of that daily fair value gap is 45.15.75. Right? We've reached up, in the high so far of this hourly candle is 44.15.50. So one tick away from the lower 25%. Whenever you come into a PD array, the lower 25% and consequent encroachment, or the upper 25% and consequent encroachment, that's where you want to look for the strongest reaction, meaning that's the strongest point to potentially reverse price. Right? We've just been melting up all day. Right? We've been melting up all day. We've come to a daily buy side and a daily imbalance, and now we're starting to react a little bit. You don't force anything, but you now, remember when I said you want to see how price reacts when it gets here. I went and found the level. Now we're here. You're watching the lower 25% and the consequent encroachment. Since we've been running so far, so fast, right? If I was looking to participate in any type of shorting activity, we've come to the upper 25%. Right? I would love to see, this is the morning candle, right? This is the morning high, right? So for trading purposes, this is the kind of stuff that I look for, right? This is the morning. Just say if we make a morning high right here, we don't go no higher than this lower 25%, right? Then we're going to go lunchtime. That's 12. Put this right here. Let's go to 15 minutes chart so I can map this out. Right, that's 1:30. And then that's 4. New York. Okay, so right. Let's say we don't go no higher than the 25% on the morning, right? These 15-minute candles, they really don't matter. But I would like to see we make a high, right? I would like to see us come back down. Just say we come back down to that imbalance, that's fine, right? Then in the afternoon, break. Okay. And it's just ignoring what I'm saying right now, and it's just continuing up. But since this is a session high, right? Okay, boom, that's the high. All right, since this is a session high, right? We've taken out buy side. We've taken out a anticipatory reactionary point, right? We've taken out buy side, right? Coming up here to the mean threshold, right? I would want to see price pull back, right? Let's just use this imbalance, 15-minute imbalance right there, and then take out the session high, right? Take out the session high and then give me a breaker, right? To short off of. Right? So we got the anticipatory reactionary point of the buy side. We took it, right? Give me a pullback and then take out the morning session high. So we've taken out a daily high and then we've taken out a session high, and then we get a break in market structure to the downside and then give me a breaker to trade off of with an imbalance right here. So an imbalance over here with a breaker after doing this daily high, session high, breaker, imbalance. That's the type of stuff that I look for when I'm trying to map out a trade idea. Right. And why would I say that? Because we've been running up full of gas, and now we've come to a point where we can anticipate something. If it don't give it to me and it keep running up, okay, it keep running up. I like to sell in the premium. I don't like to buy in the premium. We're in the extreme premium right now. I'm glad it helped out, Ant TV. You're welcome, Deborah. You're welcome, Candlesticks. I appreciate that head learner share. All right, this is the last one for real. I'm hungry. 10:48. I make room for the fact that I'm new to ICT, but with both opposing arrays, I'm not following when to get in and go with the probabilities. Now, when you're in between opposing PD arrays, that's what around here we call in the middle of the road. You're in the middle of the road, right? And you're very right, because don't nobody know when to get in and go with it, because you're in between. Shout out Robinson, he called it fair value gap ping pong. When you're in between bullish and bear, we call that in the middle of the road. We call that high resistance liquidity runs, right? We call that sit on your hands and wait for price to show you what it really wants to do. So you're not wrong. You're not wrong for thinking that, right? And just notice right here. Let's go. We can go to a daily. Let's go to a 4-hour chart so we can get some more context, right? Look at how much time we spent in between this weekly fair value gap and this weekly fair value gap, right? So we got a weekly fair value gap above us, a weekly fair value gap below us, right? All of these are 4-hour candlesticks. So let's see the exact day when we did. I'm assuming this is the day we made this fair value gap right here. I'm assuming that's the day. I'm gonna put that there. And the reason why I'm doing that, because that's a low inside there. Let's go up to the 1 week. that low right there. That's the same low, because that's the what's the name? This is the one where we was like, if this was the one we was like, this is a weekly, but this is the weekly one right there. That's the low right there. So this weekly and that weekly, right? So we was there, all of these 4-hour candlesticks right there, right? Slowly moving up. This one here, we stayed there, right? We stayed there for a whole day, moved up during that day, and then we stayed there for an entire week. This is entire week right here, in between this fair value gap and that fair value gap. So a week and a half, we was in between these two fair value gaps just to wait for CPI to push us above that fair value gap right there. Just to push us above that fair value gap right there. And then now that we're above that fair value gap, like this here, these, you know, like these 4-hour candles closing above this weekly, you know, that's showing you a glimmer of hope, right? But that's a weekly, so you want to see what the weekly candle does with this, right? You want to see what the weekly candle does with that fair value gap. The lower time frames is a glimmer of hope. The lower time frames show you what may be possible. But when you're in between opposing PD arrays, you're subject to high resistance liquidity runs. Leave them alone and wait for a definite, this is what I want to do. Hopefully I was able to share something with somebody that helped them out today. If I didn't, I promise you, I'll try my best next time that I get on Al Gore's internet. And if you know somebody that may be able to benefit from this, man, tell them to pull up tomorrow at 9:20 a.m. Eastern Standard Time for day 3 with yours truly, Aranya Grande, aka Big Spider. Y'all be safe out here in these trading streets, man. I'm gone.